Welcome to the video. Today I'm going to be showing you how to backtest and how to master a pair. So I've been asked by one of my members, for example, in the level 6 video, you say how you need to pick one pair and stick with it. You could show how to pick one, like what factors to look at, etc., to be able to pick the most suitable pair and master it, or how to figure out the risk management or ratio, etc. If you have it in your paid course, okay, this bit you don't have to worry about, but yeah, basically the question is how to pick a pair, how to master that pair, and risk management and risk ratio. If you want to learn the rest, I do have a level 6 course. Well, it's a free course and it has 6 levels. You can go through it. On the final level, it shows you how to make your own plan. So if you don't want to miss anything out, go to my Discord. Link is in the description. You can join for completely free. And yeah, let's get started. So what is backtesting? So first of all, if you have a plan, a trading plan, or maybe you got a trading plan from your friend, you want to backtest, you want to test it out, right? So what we're going to do, we're going to quickly go and search up for a quick plan. So for example, this is a plan, right? It's saying, I don't know what that was saying. Imagine it's a head and shoulders pattern, okay? Because I don't understand what they're saying. Well, I do understand, but I can't be bothered. Anyway, so this is our plan, basically head and shoulders enter, right? Now what we're going to do, we're going to go to the charts, and we're going to go back. So imagine we're at the very start. Let's go to the very start real quick. Right here. This is what you're going to see at the very start. We're going to go back. So you can scroll down and go back. This is back testing. You're going to go very back, then look at the charts. So if your plan is to look for head and shoulders, then enter. Okay, so head and shoulders, if you guys don't know, head and shoulders is a pattern in the market that indicates a reversal. So this is what we're looking out for. I already see one. Boom, boom. Yeah, you can say this is a shoulder, then it goes up. I like to count this as a head, so we're not gonna use that. We're gonna use this. Oh, let me redraw it. That looks way better. And you're gonna enter right here, and you made that money. So we're gonna keep back testing. We're gonna keep going back and looking for that pattern. Again, found it. Enter, buy. Go again. We found it. Enter, sell. Again, we found it. Okay? I think you give that example. When you have a plan, it doesn't have to be the head and shoulders, it could be your plan. As you're making your plan, oh, sorry about that noise. If you're making your plan, you're going to keep going back. Imagine your plan is fair value gaps, right? You're going to find fair value gaps in the past. And if it tells you to enter right when it touches it, then you're going to keep entering. Like this. Now, here's the good part. You're going to go to the text right here. Click on the little arrow and go to anchor text. This makes it so it doesn't move around. Go right there. Make it a big number, big, so you can see it. And you're gonna put W for wins / L for losses. How much times have you won? How much times have you lost? If you won 2 times and you lost 8 times, then you need to go through the plan again. Retry. Okay, if you come up with the same result, retry one more time. Same result again. Okay, so now it's consistent losses. you need to change a variable. So let's say we're entering on Head and Shoulders, right? But it has no shoulder on the left. So imagine it just goes up, then one little shoulder. Imagine you see that. When you see that, like this, up, one shoulder, and you sell, but it goes up, you lost. So what variable can we change? Okay, we're gonna enter when there's two shoulders. So next time we go, shoulder, head, shoulder. Now we have both shoulders. That's the variable change, and we won. So it's all about back testing a plan, going back and testing out. If it doesn't work, change the plan, change variables, change whatever you need to change until it does work. So now we're going to go on to how to make the plan. As I said, you're going to go to level 6. That's going to teach you some of the stuff. And then here, it's going to teach you more of the stuff, okay? As I said, one of my members have asked some questions. So here's the questions. We're going to be going over how to pick a pair. Now, it doesn't really matter what pair you pick. There is slight differences, like volatility. Now, if you don't know what that word means, it means how active the market is, kind of. Like, it's how big these candles are. You see how these candles are huge? Like, you got big, giant moves, like this, big, giant moves. This is volatility. This is high volatility. It's very volatile. Now, if you go to another pair, like this, look at it. Very, very, very less volatile. Very slow. Oops, wrong one. Look, very, very small. Very, you know what I mean? Got a big pivot there. Then back to very small. Another big pivot. And so on. You get what I'm saying. It's very less volatile than this. Look at that. Huge. Huge. Understand what I'm saying? Different pairs have different personalities. And you can pick whatever pair you want. And I'm going to teach you how to master that pair. If you want as well, you can search up on Google, what pair should I trade? If you really, really don't know, you're very indecisive. Okay, gives you a suggestion, Euro versus the US dollar, trade that, it doesn't matter. Or you can go on this website, and this will show you like the current volatility. So if this is very, very volatile, that means you're gonna catch more money if you're right. Potentially lose more money if you're wrong. Then maybe you want something that's volatile. You can go down here. Canadian, very less volatile compared to New Zealand. Market movers, go to here. Top gainers. How much are you gonna make? If you wanna use Euro against New Zealand, you can use that. Apparently it's a top gainer from statistics. Use whatever you want, okay? I really don't mind. So now that you picked your pair, how to master that pair. So what I want you to do, if you're starting from scratch, first of all, go to my free course. This teaches you everything you need to know. It teaches you what websites to use, how to get started, what tools to use, how to actually make a trade on MetaTrader 4. Maybe you don't know what MetaTrader 4 is. I'm going to teach you it. I'm going to teach you how to trade, what to look for, and so on. In level 6, I give you like a template. This is what I do. I give you like a little template, and it's up to you to backtest the market and put your own variables in. So make sure you go do that. Go to my free course and get to level 6 so you can get started on that. Anyway, how to master the market from this guy's questions. We're gonna go to the charts, and we're gonna go to every single time it pivots. We're gonna mark it out, okay? So go back, and every single time it pivots, we're gonna mark it out. So what does pivot mean? It means reverse. So right here, reverse right here. This is the very, very top of the reverses. This is the very, very bottom. Hello? Okay, I don't know when my mic cried out, but it's fine. So I don't know when my mic cried out, but as I was saying, this is forming a little uptrend. So this is why it went up. If you don't know what uptrends are, you can go to my course. I do teach what uptrends and downtrends, market conditions, everything like that. Okay, let's move on to the next one. So first of all, we saw the IC head and shoulders, very, very deformed one. Maybe you can see a zigzag. Down here we saw uptrend. What else do we see? Okay, let's zoom in on one of these little pivots. I see another head and shoulders. Then it goes down. Again here. Another head and shoulders. Goes down. Again here. Another very, very deformed head and shoulders. Then it goes down. Okay. Just keep going. Okay, we see another pattern. Let's see what happens here. Okay. What happens here? Wait, that's a pivot to the upside. Okay, what do I see? Let's go down here. What do I see? Okay, I think you get the example now. You're gonna go to the pivots, mark out what you see. Now, what's the most common thing we see? In my opinion, I see this pattern the most. And this is what you call the head and shoulders. This is what I teach you in the free course. This is what I see the most. Right here. Right here. That's no one. This is one. This is one. This is one. This is one. So 1, 2, 3, 4, 5. Around 6 times out of 8, I think we marked out. Well, except for these ones, I think I marked a little bit too much. But I think you get the example. Go back, mark out the pivots, and let's see what you see. Maybe you see something else. It doesn't even have to be a pattern. Maybe you see a fair value gap. Maybe this is what you see in every single time it reverses. So then you're going to keep entering when you see a fair value gap and price enters it. Then you're going to buy. Or maybe sell. It's up to you. This is your training plan. This is yours. You have created this. It's up to you. If you want to follow my free course, you can use that. You can use the head and shoulders. Okay, next step on how to master the market. Once you find out what pattern you're going to use, either head and shoulders, zigzags, uptrends, or downtrends, whatever you're going to use, once you figure that out, you can now try to measure the market. What does this mean? The market runs on pips. This is how you're going to measure the candles. It's like centimeters. So it's called pips. And right here, this is like the ruler. This is how you're going to measure it. If you want to find the tool, go on my free course, level 1, or just quickly go here. Go to the 1, 2, 3, 4, 5th one down. Click the little arrow, and it should be called price range. You're going to click on price range, favorite if you want. Now we're going to find the average amount of pips moved in these pivots. So I'm going to be marking this one because it's just red, then it's green, green. So the high is right here. The low, I say, is right here. So let's measure it. Okay. Now the number we're gonna be looking at is this number 482.2. Don't forget about the negative. We don't need to worry about that. It's 482 pips. Okay, let's go to the next high and the next low. So this is the high right here. Let's find a nice low. I guess we could say that's a low. This little candle right here. Now, how much is this? How much pips have been moved here? Okay, 292. Again, let's try again. I say this is a high. This could be a low. How much pips was moved? Around 200. Okay. Okay, so now our average is around, let's say it's around 300. So once you get your average, after testing this many times, your average is now 300. So now we're moving on to risk management and risk ratio. Let's go to backtest. So you learn how to master the pair. You mastered the patterns when you should enter the market, and you mastered the average amount of pips moved in that pair. Once you have those variables, plop it in the plan. Next is risk management and risk ratio. So you're gonna go to your charts. And as we said, our average pips is 300 pips. So we're gonna get a long position, and we're gonna be aiming, so take profit, we're gonna be aiming for 300 pips. Now, here's the risk ratio. A risk ratio is like 1 to 2, 1 to 3. Oops, sorry about that. 1 to 2, 1 to 3. So this is, so 300, so we're gonna be aiming for 150 on the stop loss. This is, hang on. This is a 1.5, is it? No. It's a 1 to 2 ratio. So every time you win 300. Every time you lose half that amount. 1 to 2. Maybe you don't like that. Maybe you want to lose only a little bit, so you're going to half it again. So 150, that's 75. So now you're going to have to lose 4 times to even lose profit. And then if you do lose 4 times, you're going to have to win once to make all the money back. That's how it works. I think what you guys should aim for, this is up to you, but I think you guys should aim for nice 1 to 2. Very average, very nice. My paid course, yeah, you can go to 1 to 3, 1 to 4, maybe even 1 to 10 sometimes. But it depends on experience. Anyway, so now that you figured out your risk ratio and your risk management, you're completed, you're done. So let's quickly go back through everything once again. Go on the market and backtest. Every single pivot, mark it out, and see what pattern you see. Or maybe you find some kind of variable that happens. Something that happens all the time, and this is what you're going to use to your advantage. So as I said, I see the head and shoulders the most. Every time I zoom in, I'm going to see something like the head and shoulders. This is what I'm going to see. So notice. And this is when you're going to enter. This is my pattern now. This is what I'm going to enter on whenever I see that. For you, could be something else. But yeah. Once you got the pivots down, find the average pip amount. So get your price range, mark out the averages. So your average is around 400. So whenever you see a pattern, So let's imagine it goes up again, and I see the pattern, the head and shoulders. I'm gonna enter and aim for 400 pips. 400 around there. And since I want a 1 to 2 risk ratio, it depends on how much you guys want. 1 to 2 is pretty safe. I'm gonna have my 400 pip target and a 200 pip stop loss. So that way, if price does mess about a little bit, maybe it goes up here to collect liquidity or something like that, you're still gonna be safe, and then it moves 400, so now you got your take profit. Do you understand? Some people want the stop loss to be like this. It's not gonna work. Maybe you win once out of 100 trades, but usually it's not gonna work. Have a nice, good average. Again, depends on your risk ratio. It's up to you. If you want 1 to 2, then if your average pips is like 10, then you're gonna be, and you want a 1 to 2 risk ratio, you're gonna be aiming for 10 pips. Using this in a lot. You're gonna be aiming for 10 pips. See this 10.8? That's your pips for your take profit. 10 pips. And 1 to 2 risk ratio, so you're gonna have 5 pips on your risk. 4, 1. What? Get out of here. I can't type numbers. 1 to 2 risk ratio. One more example. If it's averaged 30 pips, 30 right there, you're going to be aiming for 30 pips. 1 to 2 risk ratios, we're going to half 30, that's 15. So our stop loss will be 15. So whenever we see our head and shoulders like this, we're going to be safe and we won the trade. Okay, so I hope you guys did enjoy this video. To the person, Magic Bigos, I think that's how you say your name. I hope I answered your questions. If I did not, you can ask me again. I really don't mind going through this over and over until you guys get this. If you do want to join my free course in my server, try to come out there. So if you guys do want to join my free server, my free course, the link will be in the description. I hope you enjoyed, and goodbye.